Hello, everyone, and welcome to another episode of Sneak Peek of the Boutique Hotel Investment Conference. As you know, I'm going to give everyone a 5-minute overview as to what this really amazing pivotal conference will be like, which will take place June 2nd to 3rd online. We do wish we would be in New York City at the Time Center, but not this year. So first of all, thank you to our sponsors, World Cinema and C2C Designs. We really value your support. An overview of the conference: this is the original investment conference for boutique hotels. It was started in 2013. It was created to prove to the industry that boutique hotels are profitable. Now, this was back in 2013. Now in its 9th year, it's taken the sectors to so many new levels, and there's so many ideas and deals that get done. So we've been producing this conference for 9 years. BLLA is the association that produces this, and we've been around for 12 years leading the boutique hotel movement. Who is this conference for? It's for hotels, owners, developers, investors, managers, executives, all involved on the investment side, as well as vendors and suppliers. So those involved with technology or design, architecture, real estate, financial firms, legal firms, insurance firms, and such. There will be, so far, actually, I think there's more now, 50 sessions, keynote presentations, mentorship circles, case studies, virtual speed dating. There are so many activities and different types of content that will be happening. We have over 50 speakers now, from successful hoteliers to banks to lenders to investors to asset managers to operators. There's a lot of exclusive knowledge you'll be able to hear at this conference. Our keynote speakers are Nicholas Clayton, the CEO of Capella Hotel Group, Ian Schrager, back for the sixth time, I think, or 7th time. I'm always grateful for his support. Hilda Perez Alvarado, she's the CEO of JLL, as well as Andrew Zobler, the CEO of Seidel Group. Now, we do have a full agenda up online at BLLAevents.com. Here's just a sample as to the type of panels that we do have scheduled, like rebuilding amid a pandemic, boutique hotel development that we'll get into a little bit today, creative debt financing, securing a big deal, which will be a case study, view from the chief financial officer, the legal side of things, optimizing your assets, scaling a boutique hotel collection. And this is just a small example of the 50 sessions that will be going on. Why do you want to be there? One, connection, virtual speed dating, messaging capabilities, mentorship sessions, dedicated networking time, chat features. There's so many ways to connect at this conference. Education, it's definitely not what you're hearing at other general hotel investment conferences. Maybe there's a little bit of overlap, but we only talk about boutique and independent. That's it. We're not really talking about big brands here. We have panel roundtables, mentorship sessions, the case studies, spotlight strategy sessions, workshops, lots going on. But most importantly, why many of you will be coming is deal creation. We have been touted as this is the place where deals get done, which we're very proud to say. So we hope to see everyone there. Just to, like, overall, what you'll learn: a lot about financing, a lot about operations, and a lot about ownership. Again, only for boutique. So with that, why everyone is here today is we want to get a sneak peek of the Boutique Hotel Investment Conference focused on development. I'm joined by BLLA Advisory Board Members and committee members here today. So we're here with Mark Keiser, the Chief Development Officer of SH Hotels and Resorts. We're joined by Rani, Gharbie, the Head of Acquisitions and Development for the Pod Hotels, and Kevin Rohani, Head of Development for Lifestyle Hotels North and Central America over at Accor. So with that, hello, everyone. How are you?
Hey, thanks for having us.
Yeah, of course. I feel like we're seeing you so often now at the committee meetings, the board calls, the member virtual speed dating. I have everyone here very busy, but thank you for taking the time today. So I kind of gave an overview as to your role, but just like a quick introduction as to your role in the industry and the company that you're with, their role in the industry. We'll start with Kevin.
Sure. So, hey, everybody, I'm Kevin Rohani, Head of Development for Accor's Lifestyle Hotels in North and Central America. This is really as a product of Accor's acquisition of SVE. I represented the growth of SVE's portfolio globally We're very fortunate to have the resources and reach of the big brands, but able to really reflect culturally relevant lifestyle and luxury lifestyle hotels in markets across the globe. So it's been an absolute pleasure going through the integration process and working with some industry leaders as we've been kind of gearing up for the next phase of what our business is going to be entailing.
That's awesome. Thank you, Kevin. Rani, what about you?
Hi, so I oversee development acquisition for Pod Hotels, and Pod Hotels is a micro hotel concept that we're growing aggressively. We have about 5 hotels now, mostly New York and Williamsburg, and we're looking to grow it to about 50 hotels in a decade. We're part of a group called BD Hotels. BD Hotels is largest or second largest independent hotel owner in New York, mostly boutiques. We part of the portfolio, we have the Mercer, the Bowery, the Greenwich with Bob De Niro, the Ludlow, and a bunch of other properties, including the Pod portfolio. So, you know, we're very New York centric and very New York long. So it has downsides and upsides.
Yes, thank you, Rani. Mark, what about you?
Hi, everybody. Mark Keiser, oversee development for SH Hotels, which is really 3 brands: Baccarat Hotels, One Hotels, and then our most recent brand, Treehouse. And we are an affiliate of Starwood Capital. So while we're a smaller organization, we do have some great resources on that side, whether it's for equity or debt, which makes us a little different from some of the other brands.
Thank you, Mark. And again, thank you everyone for being so active and a big part of our association as well. Let's get right to it because we don't have a lot of time. Again, this is a sneak peek. Right when we get to the good stuff, we'll have to hop off. But I want to start off with, what are you seeing on the capital market front for ground up development opportunities? Rohney, why don't we start with you?
Ground up development is a very interesting term in our during this patch in the cycle, where that's something that went completely dormant. Let me just step back a little bit. We were working on about 10 deals, ground up deals in February 2019, or 2020, sorry. And then the pandemic hit and everything went on hold, right? It was like deer in a headlight. All the deals got frozen and folks were just putting dry powder on the side to acquire distressed deals that never came, at least to the magnitude that was expected. And now what we're seeing as of beginning of 2021 is diversions of some of that dry equity that was lined up for distress to come back into development. So out of the 10 deals that we were working on, only 3 have come back to life, to active negotiations a few weeks back, or a few months back, I should say. It's a good sign. And you know, in a couple of months, I'll elaborate a little bit more on what got those deals traction, those 3 deals versus the other 7 that are still dormant, some of which is the fact that those that came back to life are more mixed use nature, right? And some others that came back to life are more resort, drive to, fly to, short haul flight to destination. And investors are a bit more comfortable to play there in development, but definitely not to the extent that we were at pre-pandemic.
Yeah. Thank you for that viewpoint. Also, to our audience, if you do have any questions for the panelists, feel free to use it in the chat feature or the Q&A feature. I'll be monitoring both. Kevin, let's go to you next. Talk to us about SBE.
Yeah, sure. And just to kind of point out the picture behind me, this is a product of a ground up development in Dubai for a skyscraper SLS that has hotels, for sale residences and service apartments. It opens on Monday. It's been interesting because I feel like in 2020, everybody was kind of caught trying to put forth their point of view of what's going on and how it's going to respond. And we've started seeing in this year a massive uplift in the sort of the term sheets that are going back and forth between our owners and our lenders for certain projects. So while it was really tough, I'd say the first 6-9 months of COVID, we're in the process of finalizing and announcing a handful of really remarkable world-class ground-up developments that have gotten incredible traction with the lending community. I think we had time, right? As Ronnie had mentioned, there were projects that exist, some kind of fell off and some continued. We did have some that fell off, but the ones that continued, it really gave us a period of time to really refine what these projects are and how they should be perceived in a kind of a new world market, right? So we had definitely a lot of planning and adjustments on some of our existing programs, diversifying the way that the programs were so that they looked a little bit more friendly to lenders and things like that. But we're starting to see it uptick, and I'd imagine it's going to continue up for the rest of this year. So fingers crossed. I hope I didn't jinx everybody, but
no, don't jinx this. Yes, up and up, up and up. Well, I know, Mark, you also had a really specific viewpoint on ground up development.
Yeah, I think, we recently announced a treehouse, our first treehouse for the US in Miami, and that's a ground up development. And to Rani and Kevin's earlier point, it's a component of a much larger project. So it's like 62 stories tall, large multifamily component, small office component, big wellness, and then hotel component within there. And so it's going to get done purely on the basis of all of those different drivers of the economics of the deal, and throw in to the fact that it's in Miami, which is kind of the brightest spot, I think, in the US from a hotel market, and also works well on the multifamily side. So we're seeing pockets there, but but in reality, it's really tough to get construction financing speaking specifically to the US for ground up deals right now, and that'll change. And so I think if you're in the planning process and that need 6 or 9 months, I think there'll be a much different opportunity for securing financing at that point. But right now is a good time to be kind of doing that planning. And if you were ready to go, maybe rethinking some of the things to make it financeable when the market comes back again, I'm going to throw a dart and say 6 or 9 months from now.
Okay. 6 or 9 months. We'll have to follow up with you in 6 or 9 months.
Yeah.
Well, I know we're talking about ground up, but something I'm also looking at, are you guys working on any adaptive reuse projects, or is it mostly ground up right now? It's a question we get a lot.
I mean, I'll jump in. We're seeing more hotel to hotel conversion opportunities. And again, to Rani's point, we thought that there would be this huge opportunity in the market with distress. And we were really active right at the beginning of the pandemic. Those deals didn't happen. Really nothing got done for the last year. And now we're in the process of bidding a few deals with Start Capital and others that, come the conference in June, I hope to be able to talk more about. But we haven't seen adaptive reuse as of yet. And that may be specific to our portfolio. I'd love to hear, the rest of the guys.
Yeah, what do you guys think?
From my perspective, the pod brand per se is such an efficient concept in terms of construction and design that it shrinks the pools of opportunities. So we can't achieve the same return per square foot if we were to convert in general. Of course, there's exceptions. Then if we were to build ground up development, our rooms are relatively small, and they drive extremely high NOI per square foot. And the whole ethos of the brand is to have the right dimensions of floor plates, whether H shape, L shape, Z shape, whatever it is, but just make sure that we're basically optimizing the net and the gross per square foot. As soon as we take another brand and try to convert it, or another hotel and try to convert it to a pod, we will start getting some losses and inefficiencies. And so out of a pool of 100 potential conversions, we may be able to convert 10, but not 90, right? So our pod 51 in Manhattan is a conversion, and that worked really well because we converted it from an older hotel that had already small rooms or quasi small rooms. Our pod 31 by Grand Central, that worked out to be a great conversion as well. But pod Times Square, which is our 700 room pod, and pod Pad, that's traditional construction. Pod Williamsburg is a modular construction, and most of the pods that we're looking at right now are ground up development. Now we looked at conversion, but not towards pod, but towards independent hotels under the BD umbrella. And like we were talking before, nothing made sense. That whole magnitude of 30 to 40% discount wasn't there up until now because of all the forbearances. And frankly, for the greater good, maybe it's a good thing that there wasn't any distress on trying to buy, because if we were able to buy, the stress means we would have been the victims of being bought as well, because we have 29 hotels and in New York, right? So the system worked in a way to refrain us from finding distress and protect us from being hunted, if you wish.
That's a very, very interesting point. Yeah, I remember everyone thought that the distressed assets, like October was going to be the month where you just like went crazy and like everyone was getting ready for it, and then it didn't happen. No. Kevin, what's your viewpoint on
Yeah, you know, conversions are really interesting. To touch on your first point about the adaptive reuse, which I love, because I came from Gensler with the architect and design background, but we've started identifying and exploring a few. So I think that might be a better conversation for the June conference. But yeah, I'll take a minute on conversions. So, really look at conversions in two different ways, in my point of view. You have branded conversions, and then you have back-end system conversions, right? So we're in the process of converting the Curtin hotels, which we're doing with the Reuben brothers in London, as a Mondrian in Shoreditch, which is going to be opening in the next few months. Early next year, we're converting the Boudoir Hotel into a Maison Delano. So those are branded conversions where we're able to come in and figure out the right ways to really bring to life the vision of what our brands is to that location and to that concept, all while plugging in the back-end distribution and loyalty systems. But where I think the significant growth opportunity lives is in the back-end systems conversion, which is something I never really had as a tool before. And I now do with Accor, right? So we're looking at independent, smaller hotels that had branded themselves, and we have soft brands in the 3-star and the 4-star and the 5-star world, to be able to go to these hotels that are kind of dealing with tough times and convert their systems into Accor's global, mega loyalty and distribution platform. And because we're spending a lot of our time and energy on growing the lifestyle and the luxury lifestyle platform, that's the target kind of market that we're going for, whether it's branded conversions or back-end systems conversions. So we've seen kind of an abundance of independent properties that have had a tough time, and I think we have a solution to be able to go and align with them and bring greater value to their hotel. So it's kind of, it really depends, right? Branded conversions take a lot longer. Back-end conversions, you can switch the keys and it's in a different system the next day. It takes a little bit of time to prep for, but it's really interesting. I think that's where I see the greatest amount of growth moving forward.
Yeah, I kind of want to get everyone's viewpoint on this. Why do you think that finally, I feel like it kind of happened before COVID, but with COVID, it was like a light bulb. Why do investors see boutique hotels as being so profitable now? Because I just remember interning for my mom, and like when I would say, oh, boutique hotel is profitable, I got laughed at. It's so funny how it's changed over the course. What do you guys think, from an investor's point of view, like what would you think is so attractive to boutique hotels in today's landscape? I'll call on someone. Mark, we'll go back to you.
Sure. Well, I think well-located, well-designed hotels, independent hotels, have such a leg up from a profitability perspective than the big brands, just because they don't have the layers of cost that those big distribution systems add. And so, there always will be a great opportunity for the bigger brands and the bigger distribution systems, particularly where you need to push demand to a particular location, or if you are looking for a more standardized product, perhaps, or at a price point. But I do think that the space that a lot of our members participate in, like they are in urban locations or resort locations, but in strong demand characteristics. And to the extent that you're able to drive the top line without the big brands, then that flows extremely well to the bottom line. And then the last piece I just touch on is the lack of hard kind of design standards or operating standards really enables operators and owners to tailor the product to what makes sense for that particular location, and cut out some of the cost that might have otherwise been kind of pushed down by the standardization of a particular brand, or the expectation of a guest when they go to a particular brand. Maybe you said differently than kind of the brand dictating that, but really what the guest expects.
Yeah, absolutely. Rani, what do you think?
I agree with Mark. I also think it's very consumer driven. Consumers have morphed over the past decades into wanting the hotel to be more of a catalyst that would help them integrate or experience or feel something, and particularly in key gateway cities and basically hotels had a responsibility of having a bit more of a purpose than just a place to sleep, and that's what got the boutique concept to blossom. On top of that, you layer the fact that democratization of bookings kicked in, with distribution systems not being anymore a monopoly of the big chains, not to diminish the big chains, because they have absolutely their place to play in the industry. So what happened is that you created assets in primary locations that have a specific angle that is responding to growing demand. And you add on that the fact that you're removing some of the cost layers that are really not necessary, because you're able to reach out to customers either directly or through a wider distribution system. If hotels are operated well, then you're gaining some bips on your bottom line. That's for sure. We're seeing it in our portfolio.
Yeah. I absolutely agree, Kevin. So with the evolution of, so we'll focus on SBE, with the evolution of SBE, because we've seen that grow from, first property, now it's just blown up. I mean, what do you think has really been like the sweet spot of boutique? And Sam started this so long ago, way before the trend started.
It's interesting, and kind of to add on to the comment. It's funny because if we were doing this a year ago, I would have been with them on every single point that I have the distribution and the loyalty. I'm like, this is really helping us get lending for some of our, and so it's funny, I see both sides of the picture. But
in full disclosure, I ran development for IHG for a very long time.
So, my identity is shifting a little bit, and I'm absorbing some of the new resources that we have. But I think a lot of it also has to do with, boutique is much more closely tied to leisure travel, which we've all seen is doing significantly better than the meeting and banquet business and convention travel is right now, right? So for instance, Miami, where the bulk of our portfolio is, I'll tell you this, one of our hotels in Miami had its highest ADR month in history, March 2020. Wow. Okay, history. So a lot of that is market driven too, but I think the boutique connection to lifestyle and leisure and energy is what's going to kind of help lift and catapult this platform. I think to your second point, the reason why we've been as successful as we have, and I know that there's dozens of brands that are dealing with this right now, is when you have an owner-operated brand, which is what SBE was when we started, you spend more money on your product than you normally would. We spent more on the SLS Beverly Hills than we would on a new SLS, because we've learned how to take the owner-operated heavy capital platform into an asset-light platform that allows us to create that same energy, that same vibe, the same culinary and mixology practices with the high-quality design, but at a more affordable price point so that we can scale. I think that we're learning more about that with some of the other brands that we're integrating right now, and how to get best practices, because I would say 2007 to 2012, we owned everything. We put a lot of money in everything, and then we realized it's impossible to scale this way. So we need to figure out asset-light ways to really reflect this vision and this community moving forward. So that's, I think, why. It's because we can get some of these things built at the level we get them built at a cost that's lower to some of the other people, and our tech services team has been with the company for 15 years. Teams switch at companies, people come and go. There's a lot of movement in hospitality. It's an incestuous industry, as we all know, but the tech services team at SBE is in there from day one, has done every single project. So they've just gotten better, smarter, stronger, faster along the way. It makes my life so easy. You know what I'm saying? Is because I know that on the back end, they're going to be able to create something at an affordable price. So I would give all the credit to tech services in today's world on how to create asset-light brands and scale them. But I think that has a lot to do with it, is we've been able to translate high costs to more efficient growth.
So to the tech people in the audience, thanks to you. Thank you for that. But also, Kevin, going back to Ronnie's point though, big brands, there's this amazing place for you guys in the industry. And something with BLLA is we do work with the lifestyle brands like SBE, what we call under the branded boutique bucket.
Right.
It's just that we're really big about also giving options to those who are completely independent as well. That's what was lacking in the industry for so long. It's right. big brand. Okay, now soft brand. Independent still didn't have places to gather and things like that. So this conference, We'll talk about all the investment strategies, and I'm going to stop it here, even though I shouldn't, because we're like getting like into it. But again, this is a sneak peek. If you want 2 days of content just like this, go to BLLAevents.com. I actually have a slide on that. Please join us. Because it's digital, you know, the ticket costs aren't crazy. So we hope to see you all there. BLLAevents.com is where you can grab it. Again, thank you to our sponsors, World Cinema and C2C Designs. And if you have questions, that's me and that's Fran. I feel like everyone knows Fran. You can email us at info@BLLAevents.com if you have any questions. We're always happy to answer. And to our amazing panelists, also, well, I'll definitely see everyone before June on a board call. So I'll see you before then. But thank you guys for hopping on. Thank you to our attendees for hopping on as well. And we'll see everyone in summer. Thank you guys. Have a great Friday afternoon.
Bye, everyone.
Bye.
Bye, guys.